Hey guys, welcome back to the channel. We're going to go through an experiment here and we're going to talk about what ChatGPT says that you can do to recession-proof the real estate investments that you have. We talk about it on this channel all the time. We're not sure whether we're in a recession or if we're going to have hyperinflation. Either way, I think some of this stuff does hold true and we'll kind of go through it now. I'm going to give you my solutions or my thoughts on what to do during a recession or during hard times. As they say, and as we believe, when there's blood in the streets, then you need to be buying even if it's your own blood. We're going to read a script that they kind of put out there for us, and we're just going to try and have fun, not bore the out of you or me. So here it is, guys, from ChatGPT. Hey there, fellow real estate investors. Are you worried about how your investments will hold up during a recession? Fear not, because in this video, I'm going to share with you some tips and some strategies for recession-proofing your real estate investments. Property values can plummet, rental demand can dry up, and getting financing can become a nightmare. But there are steps you can take to protect your real estate investments and even thrive during the downturn. Here's one common mistake that investors make during recessions. It's to panic and to sell off their properties. But this can actually do more harm than good, as you may end up selling at a loss and missing out on potential long-term gains. Instead, consider implementing some of these strategies to recession-proof your real estate investments. Diversify your portfolio. Don't put all of your eggs in one basket. Consider investing in a mix of residential and commercial properties in different locations and with varying levels of risk. I do like how ChatGPT focused on diversifying your portfolio, but stayed in a real estate context, right? So we believe that any good portfolio should be heavily weighted with real estate investments. The stock market, the blockchain, all of that other crap, that's playtime, guys. You want to build wealth, you want to maintain wealth, and you want to keep it. You need to have a diversified real estate portfolio focused on value-add investing and cash flow. Focus on cash flow. During the recession, cash flow is king. Make sure that your rental properties are generating positive cash flow and that you can weather the downturns in the market. I think that when you can buy something that has no cash flow and do the value add and increase cash flow along the way, that is a very, very low risk way to invest. Other people on other channels and probably ChatGPT would say that you would buy cash flowing real estate, which would to me mean that you're paying more money and you're probably using leverage to do it. So I like to buy value add properties at the lowest price possible and then increase the value by investing in and improving the properties and increase cash flow along the way as you find great tenants. So we can build it for the tenant that we have in mind for its highest and best use. Be flexible with financing. If you need financing during recession, you may need to go and be creative. Consider alternative financing options such as private lenders, seller financing, or even using retirement accounts. Stay up to date on market trends, keep an eye on the housing market, and be prepared to adjust all of these strategies as needed. Look for areas of strong job growth and population growth, and consider investing in properties that will appeal to a wide range of tenants and/or buyers. So let's take a look at an example. During the 2008 financial crisis, many real estate investors were hit hard, but those who had diversified their portfolios and focused on cash flow were able to weather the storm. They were able to take advantage of the downturn by buying up distressed properties at rock bottom prices, which later turned out to be great long-term investments. ChatGPT says, have a long-term investment strategy. Guys, everything I do is for the long term. If I buy it to flip it, it's only so that I can flip it to put more money into something that's going to cash flow that I'm going to hold for a long time. This year, for instance, we're going to buy some flips, and we haven't been doing that for the last few years. I'm doing it because I believe the market has shifted. And so I'm going to buy some things to generate some cash flow. In the event that the market continues to go down, we'll be able to get in and out and keep the money coming in so that when the market gets to the bottom in a year or 2.5 years, wherever it is, at some point in the next 18 months to 2.5 years, I believe that the market's going to reach its bottom. And at that point, we're going to just go all in. We're going to buy some things that we never intend to sell, and we're going to just pound it, right? Like once this market figures out where the bottom is or gets close to it, we're going to start buying things to keep forever. So by implementing these strategies, you can recession-proof your real estate investments and even come out ahead. You'll be able to weather the storm and position yourself for long-term success. If you're worried about how your real estate investments will hold up during a recession, start taking action today. Focus on generating positive cash flow. So she didn't talk much about, or she didn't put in the script for me to talk much about value add investing. And so that's one place where I would say that we differ greatly. I would tend to still, even in down recession, buy value add properties because I believe firmly that when you're buying this value add property, you're doing exactly what the phrase says, right? By buying something that needs a lot of work, you're increasing the value by fixing it up. You're also going to take something that has very little cash flow or no cash flow, buy it really, really well, buy it cheap down here, then you're going to bring it up to its highest and best use through value add and increase the cash flow at the end of the day when you put good tenants in there. So if you're going to be a real estate investor and you're going to hold things for cash flow, you need to have a good relationship with your tenants. So let's give a for instance here. We would look to this year probably buy more long-term rentals, say on the island of Puerto Rico. For the last few years, we've been doing a lot of hospitality, but as the market has shifted, we're looking at finding a way to get some more stabilized income. And I think that long-term rentals could be that. Well, hey guys, that was fun. So ChatGPT gave us a script. It's pretty damn good technology. I told you then as we went through the bullet points, hopefully you get at the way we think differently on this channel and why you subscribe to this channel versus what the robot says. Hey guys, thanks for watching. And I hope that all these tips and strategies have been helpful. Remember, the key to recession-proofing your real estate investment is to stay informed, be flexible, take action. Until the next time, happy investing. God bless. Give us a like, leave a comment, smash the subscribe button.